Welcome to Slay the Spider. I'm Jim B., your host. I created Slay the Spider, and I'd like to tell you how I came up with that name. The S&P 500 index is the largest, most followed index in the United States. Most financial professionals judge their performance against the S&P 500. If you buy shares of the S&P 500, they're called S&P Depository Receipts, SPDRs, and it's pronounced spiders. To slay the spider means I intend to beat the S&P 500 substantially. There's three major influences on the price of a stock. According to a study by Benny King, company fundamentals account for 20% of the stock's move, the market 30%, and the sector is 50%. This changed my career as a financial advisor. Once I understood how important the sector and the market are, then I began to spend all my time focused on the 80% that moves stock prices. Do you know where your sectors are today? Do you know where the market is today? Let's go look. What if you had a stock market image, a snapshot? The reality of the stock market is investors go through a series of psychological stages. Things don't change. Cycle to cycle, it goes the same way each and every time. Once you understand that, then you can anticipate what's going to happen, and the secret of investing is knowing what's going to happen next. What if that snapshot showed you in December tech stocks are about to go parabolic? In January, we're at a market top. Play defense. Take profits in the next rally, or at least protect your profits in the next rally. Coming up, we're going to go on offense and be aggressive. There's much, much more the circle could show you. All you got to do is have the patience to watch it go around the cycle and see how it happens. This is the snapshot of the market on December 4th, 2020. On that date, 18 sectors were in the red zone. And that was the day I created the red zone because it met my minimum number of sectors required to create the red zone. What's important about it is when that happens, the market is about to have the market leaders go parabolic. At that time, you want to get very aggressive. Then on January 8th, we had 27 sectors enter the red zone. And that gave me the signal that we're at a market top. It doesn't mean sell right now. It means sell into the next rally because that's what's going to happen real soon. On January 15th, a week later, I prepared for the next event on my circle, and I call it the pigtail loop. It's We're just getting ready for that. And on January 15th, there were 28 sectors in the red zone. The following week, January 22nd, there were 26 sectors in the red zone. And notice the number of sectors declined. That means this market is ready to go down. The following week, we had a downturn. And you see that the sectors, a lot of them moved to the downside of the pigtail loop. The red zone had gotten down to 8 sectors, and what we can anticipate next is to move up, back up, and a number of the sectors will get into this area, and some of them will go back over to the bullish side. There are 22 sectors in bear country on this particular date. The following week, we eliminated the red zone because the number of sectors had dropped off substantially. We were down to 10 sectors. There were 21 sectors in the bear country, and you'll notice these sectors are moving up, and some of them actually moved over just as we anticipated. The week of February 12th was the actual date that the market peaked out, and 23 sectors had moved back into the old red zone, but since we've already gone to the bear side, the red zone's eliminated, And now we can expect that we're going to see deterioration again over into the bearish country. And that's exactly what happened. The next event that we're going to see is another loop, only it's a sizable loop, and we're going to see the downside. This was on February 19th. There were 21 sectors above the 90% level, and we had 12 sectors in the bear, on the bear side. The following week, this is exactly what happened. All these sectors moved down exactly as we had anticipated. Now we went from 23 sectors last week to 10 sectors in the X-red zone. And the next move we're going to see is coming back up, a rally back. On March 5th, it completed that downside. You can see all the sectors that have moved down here. And we're anticipating it going back up, and some of them will go back up over here into the X-red zone. By March 12th, we had made this move up. The sectors were up higher again. We had 10 sectors that were back in the old X-red zone, and the market moved exactly as we anticipated. Basically what you're seeing is 2 steps down, 1 step back. 2 steps down, 1 step back. That's what happens in the market as investors move from euphoria to anxiety to denial in the introduction. So this is where we're at today. We've watched since January when we were euphoric. We had the pigtail loop happen, and that created anxiety. We then had a rally out of that. A lot of people were in denial that we were in a bear market. They were still hoping that we were going to go higher. Then we had the toe dip when the market fell about 10% on NASDAQ, and that sent a lot of people from denial into fear. Now, the last couple of weeks, we've seen the 2 steps down, 1 step back, and we're at the 2 o'clock position. So, what do you think is going to happen next? Think about it for just a second. Investors have gotten some fear about this market, and we can see it in their actions. On Tuesday night at midnight, 90 million Americans got stimulus checks, and the total received was several $100 billion. And what did the markets do on Wednesday, Thursday, and Friday? Nothing. The only thing that really happened was the more conservative stocks like the banking sector, insurance, restaurants, the bluest of the blue chip stocks like Johnson & Johnson and DuPont and Microsoft, those stocks had a bit of a rally, but none of the tech stocks, the semiconductors, the software stocks, those have not really rallied very much. So what's going to happen next is we're going to have another leg down in this market. And we're going to move 2 steps down from where we're at here at 2 o'clock. We're going to go to about the 5 o'clock position, and then 1 step back up, and we'll end up around the 4 o'clock area on the circle. That's what's going to happen because fear has set into the marketplace, and that move down is going to cause some people to go all the way to desperation. And it's just the normal cycle that we see every time around the circle. So I'm feeling pretty good right now that I got out of the market in January and early February. And I'm anticipating buying a lot of good stocks back at lower prices. I hope you feel the same way. Thank you. Subscriptions for Slay the Spider are $15 on a month-to-month basis, or $144 a year, which is $12 per month. I'll give you a 90-day free trial. We've been using the Circle since 1998 for private clients while I was a financial advisor, and there's also no credit card required for my free trial.